Hello, my name is Todd Hutchison, and in this session I want to talk about operational plans in the real estate industry. When first setting up a new real estate business, you'll need some form of business plan. This can be used not only to guide the establishment of the business, but it can be used to project income and expenses. In fact, any loaning facility such as a bank or other investors will generally need to see a documented plan to give their support and, of course, their money. Having a good business plan is just smart business. However, if you are in business, the need for strategic and operational planning never kind of goes away. That is, of course, if you want to be focused on growing your business and actually working out what's working for you and what you have to change. It helps you take the time to work on the business than in the business. That means stepping out and actually looking at what's important to grow the business and coming up with and writing down a strategy that gives the team the clarity of where the business is aspiring to be. Let's just step back and talk about the principles of getting clarity. Apart from the importance of the corporate brand of your real estate business, and of course that's your trade name or trade names, you may have more than one. The following three statements guides the business planning, as well as the corporate and employee behaviours. And that is, firstly, the vision statement. A vision statement is basically a statement of where you're aspiring to be. It's supposed to be inspirational. So you can say, this is where our business will be, whether that's in 10 years' time, for example. Then you have the mission statement. The mission statement is otherwise known as your purpose. Why are you here? What are you trying to achieve? So staff know not only where we're going with the vision statement, but what the actual core of the business is today in their mission or purpose statement. And one of the great ways of really building a good corporate culture is to have a set of documented corporate values. Now, values are key principles that we believe are very important to the operation of the business. And when things go really tough and sometimes you're making those really hard business leadership type decisions, sometimes you go back and say, is this decision consistent with our core values? Now, there's typically three levels of planning. The first one is the strategic plan. This is typically when we're seeing 3 to 5 years in the future. It's the responsibility of the owners, or what we call the board, and that effectively is the governing entity of the organisation. Now, it used to be 5 years, and that used to be very popular, but we found we can't really seem to be able to look beyond 5 years. So if I said, where will you be in 20 years' time? Very hard call. But if I said, where will you be in 5 years' time? So you can see why 5 was there. But why are we more talking about 3 these years? And that is because 3 years, we find technology is changing and business practices changing, legislation is changing, even the big changes that come from things like COVID-19 is causing us to do business differently. So it's very hard to kind of predict where we would be in 3 years' time. So it's now being recommended to be a 3-year plan. Where will you be in 3 years' time? And that sets out what we call strategic objectives, such as you might want to have accreditation. So you say, I want ISO 9001 accreditation, which is the quality accreditation. From there, we then have the operation plan, which basically sets out that 3-year vision into annual plans. That is the responsibility of the executive management. And of course, that's where we set up the budget. This basically takes those strategic objectives and turns them into annual initiatives for what we're going to do. So if we went back to the ISO 9001 accreditation, we would then have to say, well, we need a policy, we need a quality portfolio, we need to start documenting processes. And so it sets out what we're going to do on a year-to-year basis that effectively explains how we're going to fulfill the strategic plan. And then, of course, we still haven't done anything at this stage, so the level down is the project plans. And that's basically when we go and execute, when we put the rubber on the road. And the person that's responsible for that is the allocated project manager. And the outputs of this is the deliverables. And we've talked about clarity before. When your strategic objectives are clear, then that often makes the annual initiatives clear, which allows us to get the clear project directives. And we talked about clarity before. Well, the more these are clear, so if the strategic objectives are clear, it makes the annual initiatives easier to determine, and of course the project deliverables that come after that. That allows us to take our thinking and our strategy to execution. Whenever you have these plans, it's often good to look at also the corporate risks of executing to that plan and being able to momentarily go back and check your performance against those plans typically at least quarterly, where you sit down and you say, how have we gone, and is there any changes, is there market changes, etc. So we're always monitoring and of course reporting on our progress. A large real estate group can include many different portfolios, such as residential, commercial, you might have leases, you might have auctioneers, you might have actually strata management portfolio to your business. And these portfolios may, by the way, have their own operations plan and their own allocated budgets. So a big organisation may have multiple operations plans that kind of come together and actually makes the core one. But a small real estate business only really needs one, and therefore it will be tied to the budget. By the way, operations plans often have different names, such as business plan or tactical plan. Now let's talk about service level agreements and key performance indicators, because having performance indicators allows your staff to know what is expected of them and what they're actually working to. Basically, service level agreements, or SLAs, define what service levels the customer will receive, such as from the strata management services. It sets out the expectations and the depth and breadth of the work. And just consider property cleaning and the scope of work to that. What's included, what is expected, how often will they need to do that, and that sets out the quality that means you have service level agreements in place. Then there are key performance indicators, or KPIs. These define the desired indicators that are critical to the organisation that represents a specific goal state you're trying to achieve. See, KPIs can focus on many different things for the business to work on, such as revenue or sales, what level of sales you want them to generate, what profits you want them to make, how they manage their costs and cash flow, what they do in terms of reserves, the number of leases, the number of strata properties they're under management, etc. But there are 4 key components of a KPI. Firstly, what is being measured? Secondly, who is measuring it? Thirdly, when or at what interval is it being measured? And fourth, how frequently is that information being transferred to the other party or management? Now, KPIs can have thresholds. You can actually state an absolute KPI. You might say it has to be within this range. That's what's referred to as an absolute. Whereas a minimum standard could be that you must get to this level. We expect you to be better than that, but at minimum you've got to get to this level. Now, when you're getting them to focus on something you're trying to get them to, we call that a target KPI. And often we give a more return or an incentive if they can get to what's called a stretch KPI, because obviously the bigger the performance, the better for the business. And taking it from that target, which they're working to give them that extra little bit where they may get some kind of incentive payment or commission to get to that stretch KPI. Now you have the plans and metrics to work towards, just don't forget the other tools that guide the team. These include legislation, otherwise known as the Acts, also industry codes of practice, our internal policies, and of course our procedures. That is our internal business systems. So in summary, note that having a documented strategy makes it clear to everyone in the business where the entity is going to allow them to be working together. You may have heard that analogy, getting everyone on the bus in the right seats and everyone knowing where the bus is going. Remember, process guides behaviour, and your success is in your people, but the value of your business also depends on the business systems you have in place.